A class action lawsuit filed in a Georgia court alleges the crypto exchange failed to secure user accounts against theft and hacks and seeks damages upwards of $5 million US. Coinbase failed to properly secure customer accounts, leaving them vulnerable to theft and unauthorized transfers. A putative class action lawsuit filed against the crypto exchange last week alleges. The complaint filed in the U.S. District Court for the Northern District of Georgia also accuses the company of causing financial harm to users by locking them out of their accounts permanently or for long periods of time, as well as violating federal law by listing securities on its trading platform. Now, we're completely aware of the securities issue. And this is people just basically trying to topple that into a lawsuit to get a little bit more headway with the locking down of their accounts and so on. This has been something Coinbase has played with quite a bit. You know, we've seen this across crypto. When it goes into a bear market, we start seeing exchanges shut off basically access to your crypto accounts, all of that. That's why we preach not your keys, not your crypto. Get your crypto out of exchanges, because at the end of the day, you can't be guaranteed that you will have access to your cryptocurrency in the case that the company goes under or something happens, right? There's a ton of mismanagement within cryptocurrency exchanges that put them in positions where they're over leveraged, over promised, etc. And then they do not have the funds to back up what they are promising. This is another problem, of course, with all of the CeFi in places like BlockFi, etc. Just be aware that this stuff happens and you need to protect yourself by controlling your own keys. Coinbase, which last year became the first cryptocurrency exchange to go public in the US, is facing a string of lawsuits from unhappy investors. In addition to another aspiring class action lawsuit filed in New Jersey, alleging the company allowed US persons to trade unregistered securities earlier this month, a Coinbase shareholder accused the company of misleading investors about last year's public listing. The platform is also trying to settle two separate lawsuits filed by investors through arbitration. The Georgia lawsuit represents a class of more than 100 people, including lead plaintiff and Georgia resident George Catula, though Catula's attorneys say there may be more victims. Quote, "We are aware of a large number of fraudulent transactions in the accounts of Coinbase customers," end quote, said John Herman of Herman Jones LLC, the Georgia-based law firm representing Catula, in an email statement to CoinDesk. "We are encouraging all Coinbase account holders to review their accounts carefully and advise us promptly on any irregular activity." Now, the hard part here is that this isn't dissimilar from people's Steam accounts getting hacked, their Gmail accounts getting hacked, and so on. I consider that a personal responsibility. The only time when that wouldn't be a personal responsibility is if the back end was basically attacked or leaked, or they were negligent with their database security, etc. And this is where I have a couple questions. How much of this is users being negligent and not properly securing their account with multi-factor and those options, and how much of it is actually something wrong with the actual security of the platform itself, right? So I won't draw a direct correlation, of course, because it's a little different, but it's kind of like the arrest of the creator of Tornado Cash, where you kind of need to attack the people that are hacking it, and you need to secure yourself from that sort of thing, not necessarily attack the platform. And like I said, that actually comes down to in what manner were these accounts basically hacked, right? Were they hacked because Coinbase was negligent and leaked a database with like the MFA keys or something like that? Because that has happened, right? We saw that not too long ago in crypto last year. Or is it because the end user fell for a phishing scam and typed in their password into an illegitimate site? That's kind of the question. The lawsuit details some of the alleged issues, citing a 2019 incident in which the exchange reportedly took over 6 months to let a customer back into their own account. a pattern that the suit alleges the company repeated. Now, that is obviously a problem. If it is purely a security issue and they're locking it down to make sure that the funds aren't lost, I would say okay. But in 2019, obviously, we were going through similar bear market situations, and a lot of this ends up being the accounts being locked so that the company themselves can essentially be able to pay the customer back at the end of the day because of poor investments. That could be a potential issue too. Coinbase first requires customers to use its support team, and if the issue is not resolved that way, customers then have to go through the formal complaint process, the complaint said. If that fails to resolve the customer's dispute, only then can customers attempt to resolve disputes through arbitration. But Coinbase systematically fails to follow these pre-arbitration dispute resolution mechanisms as set forth in the user agreement, thereby rendering the provision, including its delegation provision, void, the filing said. Moreover, the suit alleges that some of the assets listed on Coinbase match the U.S. Securities and Exchange Commission's definition of a security, which obviously we know the SEC has already defined whatever those were, and the company itself may be an exchange under federal law, meaning it would have to register with the regulator. The lawsuits began piling up this year after the SEC said it was investigating Coinbase over the alleged sale of crypto securities in July. Coinbase's user growth has outpaced its ability to provide the account services and protections it promises to customers, Catula's complaint says. The suit alleges Coinbase's failure to establish and maintain adequate cybersecurity measures caused investors to lose their wallet and account access, the assets and investments in those accounts, as well as sensitive personally identifiable information stored in their Coinbase accounts, and among other things, their investment opportunities. Catula's suit is seeking damages exceeding $5 million, excluding its legal costs and fees, a binding judgment, and injunctive relief, which is an order to prohibit involved parties from carrying out certain activities. Coinbase did not respond to a request for comment at press time. Now, this all bodes pretty negative for Coinbase, and I would be extremely careful with any sort of funds that you have in Coinbase, going so far as to not offer financial advice, but say that personally, I would pull out any of the crypto that I have in Coinbase, regardless of what side you're on in these suits, whether you think that Coinbase is being unjustly attacked or targeted in this particular situation, or at least, in my humble opinion, would be kind of unjustly targeted with the whole securities exchange problem from the SEC, because we know that as far as the SEC doing that, that's because they're trying to nail somebody on insider trading, and you can't basically get somebody on insider trading unless you deem some of the coins that they are basically trading to be securities, which it's kind of like a retroactive attack, and I don't think that works. Like so it would be like essentially the way the SEC is handling it now, which I don't agree with, is that they are retroactively defining cryptocurrencies on the platform as securities so that they can prosecute people for insider trading. And while I'm not a fan of what the people at Coinbase were doing, I don't think that you should be able to retroactively change the definition of something so that you can prosecute somebody in the short or in the future or in the current and the present. Change the definition of something in the past to prosecute somebody in the present, I think opens up opportunities for basically corruption. And I don't think that is the way that should go. I think they should get a slap on the wrist. And then if the SEC wants to basically start defining certain cryptos as securities, they can basically do that and then make the exchanges aware of that. And then everybody is on the same playing field. So that's kind of how I fall as far as the SEC defining those cryptocurrencies in particular as securities, because I think it's a little effed up the way that they did it. Now, in the case of cybersecurity, etc., look, I'm going to say it once again. It doesn't, like, the kind of this trend of everybody wanting to put the blame on everybody else for their own failings is a little frustrating. Within cryptocurrency, you have the ability to secure your own funds, and you need to do that. By and large, I'm going to say take responsibility for this, because then you wouldn't even be in a position where a class action lawsuit is necessary. And once again, that's going to be controlling your own funds, controlling your own keys, and running it on the blockchain. Anytime you put it into an exchange, at that time, you're not actually being recorded on the blockchain. So you have no proof of any of the interactions that you've had. And I just think that that is paramount to the actual cybersecurity or whatever of Coinbase. Now, if they have cybersecurity problems, we should be aware of them and be made aware of them so that you can make your decisions on who you utilize for your transfer of cryptocurrency into fiat currencies. Yes, that's true. But I think as far as securing it, you have options and you should utilize those options. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.